All right, back to work. Tuesday evening, 15th day of February, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trades. If my voice will last long enough, help us find the best trades for Wednesday's trading session. I got a great video in store for you guys and gals tonight. Charts are all ready in the background, as you can see. Got the S&P ready, got the Nasdaq ready. Oil's ready. Glad to see you are ready right along with us. I wish my voice was ready as well, but that's all right. We're going to make tonight's video work. I'll make sure you guys are ready with the best trades for tomorrow. I'm going to cover all my favorite setups going into Wednesday's trading session. And of course, you know me, I'll make sure to give you guys some tips to keep yourself out of trouble, whether you're trading on your own or you're trading with us tomorrow in our morning trading session. Before we jump into tonight's video, got a lot to cover here tonight. I'll try to keep it short with the voice situation. Got a lot of great trades on my radar for tomorrow, and we're going to cover all the details here in this video tonight. Before we jump in though, please make sure you subscribe to our YouTube channel. I publish this video every evening, my best trade ideas for the following day. I don't want you to miss tomorrow night's video, so make sure you subscribe. If you have any questions for me tonight about tonight's video topics, drop me a question in the comments section. I would love to answer any questions that you might have along the way. And if you guys enjoy this video as much as I usually enjoy making I'm kidding with you, obviously. I hope my voice will last. Do me a favor, hit that like button for me here tonight. Appreciate you guys supporting this YouTube channel through good times and more difficult times here. But enough of the intro, enough joking around. Let's get to work here. Wednesday is not going to trade itself. Where's the money going to be made on Wednesday's trading session? Well, as you can see from the charts right now, everything's pretty much bullish. S&P is bullish. Nasdaq is bullish. Oil, of course, is pretty bearish. But I'll tell you right now, though, oil has a very interesting. There are three things right now that tell me that the bears better be careful here on this crude oil. I'm going to talk a lot about that as we go deeper into tonight's video. Really right now, the S&P and Nasdaq are pretty straightforward. We're looking to buy some pullbacks off support levels below the range. We definitely want to be watching for some breakouts going higher. And I'll tell you, there are just as many short setups off the highs right now on the S&P and the Nasdaq as there are for the long side. So we're going to cover both sides of the market. We'll talk about the buy side and the sell side, and we'll talk about how to know the difference, which ones to take and which ones to skip in tonight's video. And of course, over on the oil, I'll tell you, we're very bearish right now. But again, there are three reasons why. I got to say, it looks like the easy money right now could be on the buy side for tomorrow. I will definitely be talking about a couple of my favorite short setups for tomorrow as well. But you're going to want to make sure you watch tonight's video if you're an oil trader like I am, because we got some really interesting clues on the oil chart going into Wednesday's trading session. And speaking of Wednesday, why don't we grab a look at the schedule for tomorrow, because as I talked about in last night's video, we do have quite a bit of news coming Wednesday, Thursday, and Friday. Now, the big news for tomorrow will be the retail sales number at 8:30 Eastern Time. We'll see if the 7.5% year-over-year inflation has put a damper on the retail sales here in the U.S. Later on in the morning, of course, we have the oil report, that weekly oil report at 10:30 Eastern Time. And then I would imagine what is possibly the biggest wild card of the week this week is the FOMC meeting minutes. Now, what makes these meeting minutes so interesting is that, remember, we saw last week, we saw a 7.5%, a record-breaking CPI report. It's been 40 years since we've seen this much inflation in the market. The interesting part about this is that these FOMC meeting minutes were actually recorded the week before that CPI report came out. So the Fed and their notes from last month's FOMC announcement, those meeting minutes may touch on the fact that if they do see a certain threshold of inflation, they may act earlier than scheduled. So I think honestly, the biggest news for tomorrow are these three. Retail sales will definitely get us started. You want to keep an eye on that oil report tomorrow if you're trading oil like we are. And then again, I think potentially the biggest wild card tomorrow is the FOMC meeting minutes. Do they commit to anything without actually knowing what was happening the following week, right? The number we saw last week came out after those meeting minutes, right, were published, or were written up and then published here 2 weeks later. So very interesting, really good peppering of news tomorrow, bright and early, mid-morning, and then definitely stick around tomorrow afternoon for potentially some really nice reaction off that FOMC meeting minutes at 2 o'clock Eastern time. I should also remind you guys as well that as we go into the next couple days here, we are watching for rollover on crude oil. The 18th of the month is always known as an important rollover date for crude oil futures. In my experience, though, we never quite know when the oil market will roll over. We are currently on the 0322 contract, the March 22. We are watching closely that volume as the volume starts to roll over or roll forward to that 0422 contract. At any point in the next 3 days, it will likely happen at some point before the close on Friday. When you see that 422 contract with more overall volume, that's your trigger to roll forward and begin trading the April 2022 contract. So now you guys know the big news for tomorrow. Don't forget, we'll be in our trade room, 8 o'clock Eastern time, right? Learning and earning and doing all this stuff together with front row seat for that retail sales number at 8:30 Eastern time. Let's get back to our charts here before my voice kicks out on me here. And of course, we'll get through this here together here tonight. S&P's ready, Nasdaq's ready, oil is ready. Everything looks pretty good for the long side right now, but we'll see. Let me show you what I'm looking at here on the S&P first. Let's grab the S&P. What's the most important factor right now on the E-mini? The most important factor, of course, is a very strong bull market into a trading range. Buyers have pretty good control of this market right now, and you can pretty much assume that buyers will be looking for long setups off the low of that channel, off the low of that range, as well as breakouts going higher, right? So buyers would love to gobble up some nice deep pullbacks down around that 44.30 to 44.20 area. And then, of course, the same time, too, if we can get some breakouts going higher, buyers should definitely be looking for some breakouts. I have 4 different breakout patterns I'm tracking for tomorrow. I'm going to cover a couple here on the S&P and a couple on the Nasdaq as well. The buyers have pretty much one thing on their mind right now. 45.20 half is a major objective for those buyers here in the next couple days. 4,500 is an obvious big round number for a magnet, and there's a range above us. So we know the buyers would love to get up to that 45.20 half area if they can get their act together going higher. Sellers, on the other hand, the sellers have a great opportunity right now. They can short off the high with a crown reversal. They can short into a bear breakout going lower. Where would the sellers like to get to? The sellers have one thing on their mind. They want to get back down into that range from yesterday and take out some of those big lows at 43.60. So again, there's plenty of opportunities here for tomorrow. The key right now is we've got to get outside of this trading range. That's the key right now. We got to get outside of this range. Now, when you see the S&P compared to the Nasdaq tonight, you're going to see a lot of really big differences in the size of the range, where we are. So the Nasdaq and the S&P are very similar in some ways, but you'll see what I'm talking about. So make sure you watch both of these charts tonight, because if you're like me and you love to learn more about ways to make money in these markets, you'll see some really good comparisons and some contrast between the S&P and, of course, the Nasdaq. Now, first of all, as we go lower, there is a ton of opportunity down below this trading range right now, mostly because we pretty much spent the entire day today above yesterday's trading range. Anytime we see a market that spends most of the day today above the day yesterday, we know there's just a ton of buyers that would love to buy somewhere right around that prior high, right? They'd love to buy that deep pullback. And since we haven't seen one of those deep pullbacks yet, you have to think that's going to be on our radar for tomorrow. So as the market pulls back, I want you to think about two key pullback type of setups here. One is going to be simply a pullback into that low, trap in those sellers with a failure pattern, and then use that failure into pullback combination to buy off that low, right? So imagine we pull back, we go into this buy zone down here. We've got that trend line down there. We got a lot of support levels below that trading range. I'm not a big fan of trying to pick the bottom of a pullback. What I like to do is wait for those sellers to come in, let them try to short off the moving average, and then think about where their stops are. And we can buy right into those stop losses with what I call a failure pattern. Now, failure patterns oftentimes will then turn into what we call pullback combinations. So we pop back up, and that first pullback is almost always a nice add-on or a re-entry at some point, right? Going back up into that trading range. So we pull back looking for that seller failure into that pullback combination. Another thing you want to think about going lower, the size of this range is relatively large. And so oftentimes deep pullbacks result in two-legged pullbacks. If we do pull back and there's a trend line coming down overhead, what you want to keep in mind is you want to get up, over, and use that trend line for your entry. So just keep that trend line on your radar. It's not guaranteed, right? We may not get that, but oftentimes though, when you get these wider ranges, you'll see what I mean again when you see the NASDAQ here. If we bounce off that low and then go lower, that's going to give us that trend line, and that trend line is going to be your best friend for that same failure into pullback combination as we go, right? As we go back up into that trading range. Now, at what point does this thing become a bear market here? Well, we're talking about some breakouts. One breakout I would keep on your radar is that one, strong pullback, two, hold the pullback, and three, jump off the moving average. If we can get a reversal with a 1, 2, 3 move going lower, that will give a lot of momentum now for the sellers. At that point now, what I can do is I can grab a new channel and I can start looking for shorts off the high of that channel. One of my favorite places to do this is just above a prior swing. Get up above the moving average, up above prior swings, find that trap, find that failure, find that pullback combination. Now, I know a lot of you guys have already learned these entry patterns, these entry setups, and all the rules of this, because I know most of you guys have taken that free quick start class on our website. If you're here for the first time though, if you haven't learned the entry setups, if you don't know what a good setup versus a bad setup looks like, not to worry. I provide the entire roadmap. I call it my 3-step strategy. I'll put a little pop-up in the upper right-hand corner for our free quick start course, our free trading course on our website. If you're sick and tired of missing the best trades each day, or you're taking too many losses, or maybe you just don't really have a good roadmap to follow every day when you trade, right? Like when I was a new trader, I would have horrible anxiety early in the day because I didn't know what I was doing yet. I provide the entire roadmap and all the information on the traps, the failures, the pullbacks. Grab that link in the upper right-hand corner. Grab the free trading course, and you'll see a lot of examples of how we apply, right, these traps, these failures, and these pullbacks. Now, real quickly, where would the target be on the way down? Remember, the first leg, in this case, it's the breakout leg, becomes that target as we go lower. All right. Now, again, we have some pretty good objectives down there, but that will help you fine tune that target as we go lower, right? So think about the size of that first leg. That is usually going to be equal to that third leg going lower. That will help us time that as we go. Now, there are a couple more breakouts going lower here, but let's talk about it going higher, right? Let's talk about that going higher here, because I'm going to go over a few more of these breakouts so you can also apply to the move going higher here as well. For example, right, as we go higher, a bull breakout here. How about a pop and grind? A pop and grind is definitely something I'm watching here right now. Let's say we pop up, right, and we start to grind higher here. I'm going to mark up that high. I'm going to mark up that big low. I'm going to find those traps, get below those prior swings. I'm going to grab that moving average, get those bears to come in and get short off the moving average, grab that failure, that pullback combination, right? I call these the spike and grind. It'll pop up and start to grind higher as we go. And again, we know that first leg is equal to that third leg. That will give you a nice objective as we go higher. Again, you can still use that 1, 2, 3 breakout pattern going higher as well. Same thing we just talked about going lower, right? I can drill down to my faster time frame and I can find my entry off the low of that channel. And again, we know where the market wants to go and we know how to time the exits with that measured move or that symmetry technique that we talked about already. This is 2 out of the 4 breakouts. I'm going to cover 2 more of them, which I think fit a little bit better on the NASDAQ. So make sure you keep staying tuned on that. How would I sell off this high right now? What do you think? What's the best way to sell short off of this? The best way to sell short right now is going to be to getting up, waiting for those buyers to try once, try twice, and look for that crown reversal coming off of that high. Now, what you want to be aware of on this is that there will likely be a trend line, right, coming up underneath. So we're going to have to make sure, right, that as we go higher, let me run this a little bit different color here, right, make sure as we look for these traps, right, make sure we're clearing that trend line. Not going to be easy, but that's the way you want to look for the short going back down again. We're going against the overall momentum. So let the buyers try twice. Look for that double top, that trap, that hidden channel, and again, make sure we avoid that trend line. That trend line will be your best friend for that 2-try failure coming off of that high. And again, we see a lot of examples of these in our trade room. You're going to see a lot of examples of these shorts right up inside that free trading course that I mentioned earlier. So that's going to be the best way to sell short off this high right now. I'm going to cover a few more shorts on the NASDAQ. The NASDAQ has a little better illustration of this as well. One more thing you want to keep in mind, stay out of the middle, right? Stay out of the middle. Buy low, sell high, focus on failures around the edges of the range, and keep your eyes on those breakouts. We've covered 2 of the breakouts so far. Why don't we keep going here? The NASDAQ is similar to the S&P, but you will see very quickly here, there's a whole lot more bullishness going on right now on this NASDAQ. Now, a couple things that are interesting about this NASDAQ. Obviously, we're still very bullish. We can see that range right in the middle. And you'll notice one very important clue, the amount we go above the range is oftentimes the amount we go below the range. Was not the case here today. That is a very bullish clue right now. At the same time, you'll notice the S&P had that big move up and they hadn't retested. We've now retested that high. So the buyers are right there knocking on the door to break free of this trading range. The biggest problem I have right now with the buyers is that you can see that breakout leg, which is oftentimes used for a measured move, puts major resistance right there. At the same time, I can draw that triangle and you can see how that triangle rotation acts. We're definitely very bullish, but we need to get a little bit more here to really want to be a buyer up here right now. So I definitely like the bulls here on the NASDAQ, but I'll tell you, we're not quite there. We're not quite there just yet. The buyers need to give us a little bit more of a punch through these highs, because again, don't forget, ranges act like magnets. And so of course, if the buyers can break free of this, we've got a really nice level up top there at 66 3/4. And then if, probably not tomorrow, but you have to think that 15,000 big round number will be a big milestone for the buyers later on this week. The sellers, what do the bears want to do? The bears want to short this high. Absolutely. There's no problem with that trend line on this chart, right? Remember the S&P? The S&P is a pretty difficult time getting short up here because, again, you've got that trend line coming in. So you've got to get around that trend line to really get a good short on the S&P. The Nasdaq doesn't have that problem. You'll notice the trend line is very easy to work our way around. So you can see a very key difference there. On the Nasdaq, the bears would love to get back down to the other side of that triangle. And who knows, maybe this thing will slingshot reversal and take us all the way back down into that big juicy range around 14,250. That is definitely where the bears would love to get to tomorrow, right back to last Friday's closing price. That 14,256 area is a big objective for the bears before they make the run down to that 14,031. So we know where the bears want to go, right? The bears want to get short off the high. They want to end up back inside that range. The buyers want to end up back up around these big highs overhead. Now, how do we make the money on it, right? How do we make some money on it? Well, first of all, with all of this bullishness, you can certainly see the potential right now for a couple of those breakouts going higher. You know, for example, right? Let's say this market continues with this spike and grind, right? Spike and grind. Remember we talked about earlier on the S&P? Sometimes the breakouts will spike up and grind higher, grind higher. What do you do in those situations? You draw that trend line off the high. You mark up that big channel. You wait for, right? You wait for those traps, those failures, those pullback combinations, right? That's where the money is if we continue to grind higher, right? If we continue to grind higher here. Let's say, for example, that we simply pull back and we jump. Going higher here in the overnight session. That's fine by me. I'm going to mark up that high. I'm going to mark up that low. I'm going to drill down to my faster time frame. This is a 4,000 tick chart, keep in mind. And we'll look for those traps, failure, pullback combos. Remember, the size of that breakout leg will be the size of that, right, of that follow-up leg. So keep that on your radar to fine-tune those exits. I also think another really interesting breakout pattern would be like a breakout pullback. So imagine now we break out. Imagine now this market kind of kicks back on us, right? Kicks back on us right now. This happens a lot. You know, we see a lot of times where markets get a little bit overdone, and then, of course, they pull right back. Think about this area right here as acting as a major area of support. Like I mentioned on the S&P, whenever we find ourselves clearing well above a prior range, that area becomes a really great spot for a pullback. So imagine now we don't get that pop and grind. We don't get that nice 1, 2, 3, right? We get that pop up, and immediately now it kicks back against us. At this point right now, your job right now is to focus on going back up to retest that high. Anytime we see a strong move in one direction, we know we're probably going to retest that high again. And so if we see a real strong spike here in the overnight, that nice deep pullback now you've got all those bulls, right, with all that momentum, and now you can trap in those bears below the moving average. Get us below the moving average, let those bears try to get short. We can buy into those stop losses, buy that pullback combination, and think about how you can find a bigger channel. Right? Think about how a bigger channel could be used on that. That's some money right there. That's a great looking setup to buy off of that low. Remember, I'm not a big fan of picking bottoms. I like to trap in the other side of the market because it's a lot more consistent, a lot more reliable, and it's faster money that way as it snaps back up and runs those stops. So failure, pullback combo. And of course, we're trying to go back up to retest that high. So now we've covered a few more, right, of those breakouts here. I'm going to cover one more breakout on the crude oil. So make sure you don't miss that one, because the one on oil, it fits a little bit better on the oil. We've covered 2 on the S&P, 1 more here on the Nasdaq. I'm going to cover a lot more on the oil. We got one more breakout that we're talking about here. Now, as we go lower, as we go lower, how do I sell this market right now? The same basic way as we talked about on the S&P. Right now, we have a big strong move up. We've already retested that high. This thing is ripe for a short, but we need what? We need to really see signs of exhaustion. We don't just short levels of resistance in a bull market. It doesn't work that way. We have to wait for an area of resistance, a turning point, and then start to look for signs of exhaustion. My favorite way to do this in an overall bull market is to use one of those two try failures. So wait for those buyers to pull back and try once. Wait for them to try twice now. Now remember, there's a lot of different ways that we can take this two try failure. One way, draw a trend line off that low, mark it up at that high, and use that to find a channel as we go lower, right? That's a great short. If I get a trap off that high, even better, right? Even better. That's a great way to sell this thing with that 1, 2, and then think about it. All those stops are sitting right below that low, and I can easily see how buyers might get fooled into buying this pullback, because it does. It looks like it's going to break out here, but when you see where we are, though, it's just a little bit difficult to want to buy this right now. So let those inexperienced buyers, let them spin their wheels there. Let them expose their exits, and we can sell right down into that stop loss. Now, let's say we do end up going lower, right? Let's say we don't get that 1, that 2, and back down again. What if the market was to start rotating and running lower? Same idea, right? Grab that pop and grind, mark up that channel, mark up that high, keep focused on selling above the high of that trading range, right? Get above those prior swings, above that moving average, trapping those buyers with a trap, with a failure, and a pullback combination. That's another way that you can sell off of this high, right? One of my favorite ways to do that. When the market starts to pop and starts to grind down like that, find that new hidden channel and look for that first test, right? The first test is always the best test. That'll be a way for me to sell off of this high. And then think about this. Once we end up down around the low of this channel or this range or this triangle, I guess you would say, how do we buy it back up again? This is really where the best long entry will be. Because again, as we mentioned on the S&P, we pretty much spent the entire day today completely above yesterday's trading range, right? I mean, you have to think every bull, every buyer out there would love to get their teeth into this thing around that 14,400 area, right? This area will be a great place to buy a pullback. Now, here's the challenge. If we do end up seeing that really deep pullback here, right? Let's say the market really takes off the downside. Remember, anytime we see a big pullback, we always have to kind of work our way around those trend lines. I shouldn't say always, but you do want to keep an eye on those trend lines and get up and over and use that trend line ideally as that level of support. So keep that in the back of your mind as you go on that pullback. What you want, though, is you want to look for, what I'll be looking for tomorrow is I'll be looking for this very important sequence. As we go down to that low, momentum is very strong. But again, we're sitting in a great area to look for the long side here. So what I'll do is I'll trap in those bears with a 2-try failure. This is a very important key difference between the S&P and the Nasdaq. The S&P is sitting right at the top of its trading range. So when the S&P pulls back, I can be relatively aggressive on the entry. The Nasdaq is not in that same situation. The Nasdaq's way up here, and so when it comes down, it's going to build a lot of momentum. That momentum is the key to this. That's what tells me to wait for the 2 tries as we go. So again, if we do end up down at these lows, think about the bears trying once, the bears trying twice. Now, as we snap back higher, this is where you can start to look for that follow-up entry. Now, one of my goals is always to, again, get underneath the range, trap in those bears using failure patterns. And then one of my kind of goals on this is to get into that follow-up trade before I get to the other side of that trading range, right? So as we snap higher here, it's a 1-2 try failure And then I love to look for that new channel coming off that high and grab that first pullback. Now, of course, I say first pullback, right? It'll be a trap setup. It'll be a failure setup. And maybe it's a pullback setup, right? Off of that low. Again, you'll learn those stuff, right? You'll learn those setups, when to take them, when to skip them, what the rules are. You'll learn that in that free trading course. But that's the sequence I'm looking for to buy off of that low. Now, at what point when this market goes lower, at what point do we start thinking about the short side? Think about the pendulum swing, right? The amount we go up, the amount we go down, right? So we've got to get through this area and really break down, right? Very, very important that we get in a hold below that 14,000. Remember, that area over here is a really valuable level of support. So we've got to get underneath it and go. And that, of course, would be really any of our breakouts. Maybe we, of course, roll lower. The bears come in. Rather than bears trying twice and failing, now those bears will hold the pullback and they jump lower. At that point, we find that new channel. We drill down to our faster time frame. We look for those traps, those failures, those pullback combinations. Right? We know where the market wants to go at that point. Or maybe we simply roll over and we start to grind and grind and grind and grind, right? Same thing. Mark up that low. Find that high. Again, make sure we clear and keep holding below that, 13,393 area, right? What I don't want to do is see you guys shorten, right, on this stuff as we come lower, right into that area. That's going to be a backfire on you. Right? Remember, there's a big difference between this short. There's a big difference between that short off the high, right? I know this makes sense, right? We are trading the rotation at that point. If we end up all the way down at these lows, you're walking right into a trap, right? Now, it might keep going, but the odds aren't very good. Right? The odds are better at that point to rope in those bears and hit them right into their stop losses. That's the game plan as we go lower here for tomorrow. Again, stay out of the middle of that trading range. So if we do happen to kind of go back into that range and chop around for a while, again, stay out of the middle and execute the strategy we've talked about so far. And I'm sure I've missed a couple things here tonight. I'm trying to keep it as kind of brief as I can here because my voice is literally on its last legs right now. But hopefully that will give you enough ammunition to put together your game plan for tomorrow. And of course, tomorrow, I'll be doing it with you guys tomorrow morning in our trade room. So would love to have you there with us at 8 o'clock Eastern time. How about some oil? Oil is really interesting chart here right now. I mentioned earlier that it looks very difficult for the sellers to really get anything going right now. And you can see here as we're opening up right now in Asia, the buyers are already coming in and kind of sharing the same vision that I had here about 45 minutes ago. A couple of things that I find very interesting on this chart right now. First of all, we went 3 symmetrical legs down. Most trends are going to go 3 legs and then consolidate and go sideways or reverse and go back in the opposite direction. Very interesting how we have this measured move and then this reversal off of this low. What I find to be even more interesting, though, is where we are in the bigger picture. If you go back to last Friday's big run higher, you'll notice this big triangle. Now, big triangle, we just talked about triangles on the Nasdaq and the S&P, right? Notice the market's rotating back and forth. It's very difficult to ignore that triangle low right now. That's really, really difficult to ignore. And then, of course, you've got your third clue, and that is the fact that we've got this trading range right here with this rising support trend line. So as the market tries to go higher, the sellers have very little they can do with this, right? With this trend line here. They're going to have to get underneath it and find a way to use it. That seems like a good idea until you look at this factor. Why is it right now this big move down overnight, right? Big move overnight, right? We knew that short would likely retest that low, but I find it very interesting for the buyers here that the sellers couldn't keep it underneath it. They came right back up and held right above that overnight low. All of these clues right now tell me As I said earlier, the easier money right now appears to be on the buy side. It just simply doesn't look very easy right now to be a seller. So at this point now, we're looking for that breakout going higher. This is where you can put together all the different components we've talked about on this video already. For example, we may get that 1, 2, 3 breakout higher. And by the way, where would the buyers like to get to right now? The buyers want to go back up right around that 95. 95 is a really valuable psychological big round number. Oil loves to go from 95s to 90s to 85s, big chunks of $5 increments. So it looks like we've held off the 90s, for at least for now, and it looks like 95 and of course that big 8-year high at 95.82. That's where these buyers would love to get to. The sellers would love to retest that low, but again, doesn't look very easy right now. And the bears, of course, have that 90 big round number to look forward to. If they really get going, they've got that big low at 88.40 down there. 88.40 would be the big objective for those sellers. So let's see how we can trade this right now. We know we have a lot of support in our way. We know, of course, the market made 3 legs down, and it's not looking very easy to get short on this. I think one easy way to do this is a 1, 2, 3 reversal. Find that new channel, mark up that high, find that channel, and then grab that first test. The first test is always the best test. That trap, that failure, that pullback combination. Again, this first leg will be a great fine-tuned target here, but you got to think if you have an extra contract left on that position, that 95 runner is really very tempting to leave a little piece of this to snap back as we go higher. I also think that that pop and grind, that spike and grind is also very possible because of the short squeeze. You know, with all those bears getting short here from the news from Ukraine overnight, it's easy to think that if this thing backfires on those sellers, they're going to get out lickety split, and this market could really start to grind higher. Mark up that high, mark up that low, find those traps, failure, pullbacks off that first test, and then again fine-tune your exit by using that first leg as we go higher. Another very likely scenario, and something we haven't talked about yet tonight on this video, the final breakout pattern you can look for going into tomorrow will be a 2-try breakout. Strong spike up, shallow pullback, higher high in price, traps, baby. This is the 4th breakout pattern to keep an eye. But we've talked about the 1, 2, 3 breakout. Right? We've talked about the spike and grind. We've also talked about the breakout pullback. The breakout pullback doesn't look as likely on this one. It looks more likely on the S&P and the Nasdaq. But if I can get this thing to rip higher, shallow pullback, higher high in price, that trap, that says payday all over it, right? That's a nice paycheck as we go higher. In these scenarios, that leg right there, symmetrical to that leg, that's where you're leaving that final runner target to capitalize on that big move. So if you've been following along in the video so far, you've got a bunch of breakout setups that are ready to go here for the highs, right? Now, how do we sell this market as it goes higher here? This is the challenging part. Again, this low is very convincing at 91.66. I'm not really a very big fan of trying to sell this thing underneath that trend line. It just doesn't look very good. This looks horrible right now. The fact that we had all of that bearishness, and not just technically, right, but fundamentally, the withdrawing of troops on the Ukrainian border, this should have kept going. We should have at least tagged that 90, right? We went almost $5 down. Right? We didn't quite make the whole thing. Why couldn't we finish off, right, that 90.17? We couldn't make it $5 down. So there's a lot of real big clues that these sellers may not have it. I'm not a big fan, again, of that, right, of that short here off that trend line. The only way I'd like to get short on this market right now is to make sure they prove it to me that they want to take this thing lower. Show me you mean it by taking it lower. Show me you mean it by holding that pullback, and give me that 1, 2, 3 breakout. Once I get that 1, 2, 3 breakdown, now I can mark up that new channel. I can grab that first test on the way back down into that range below us. remember, first leg, third leg, that'll help you refine that final exit. Right? And don't forget too, if it popped and grinds down, that'll work too. I'm not opposed to that. That's pretty much what happened today. Right? It was pretty much a pop and a grind down on that. So what do? You find that channel off the low, up around that high, and you sell into that first pullback. Surprise, surprise, with that trap above that high. This is the same pop and grind, right? Same spike and grind as we go lower. I could definitely see getting in as one of those on the way lower, right? So we pop and we grind down. Nothing new there. Find that trend line, find that channel, drill down and grab that trap, that failure, that pullback combination. That'll be a good short as we go lower here for tomorrow. How about the buy side off the low? That's a big, strong move down. I wouldn't be surprised at all if they retest that low. In fact, that's probably the best possible scenario here. If they retest that low, how would you trade this? You would take a page out of the Nasdaq playbook. So if we go down to those lows again, right, or really anywhere in this area for that matter, at that point now what you'll do is grab that 2-try failure. Why 2 tries? Well, same reason back here, right? Because it's so bearish. So as we go lower, the bears try once, the bears try twice. Look at that beautiful trap reversal right there. That's the trade you want over here. Not very difficult, right? Once you know the game plan, just gotta wait for it. What you don't want to do is try forcing that trade long, right? Let those bears try twice. Think about now where their stops are. And then remember, trade the turn, right? Trade the turn. As the market rotates higher now, your job is to find a way in before you get to the other side of that trading range. Find that new channel high, mark up that low, and then grab that first test right off of that low. Same thing we saw over here. Strong move down. Bears once, bears twice, we go up. Oh, whatever should I do? Maybe I should mark up that high, mark up that low, and buy that first pullback. Pretty good plan, right? 2-try failure. 8 of that first test is the best test, right? Same idea over here. Run lower, rope in those bears, get it up, and then wait for the pullback, right? And grab it as we go. All right, guys. Again, if you've been following along and watching the video tonight, you've got all the pieces you need right now to trade this oil market for tomorrow. Don't forget, we do have rollover on our radar. Probably not tomorrow, but think about Thursday or Friday for rollover on oil. And then remember, tomorrow, of course, we have the inventory report at 10:30 Eastern time. So we're sitting on hands. 10 minutes before, 10 minutes after. Give it that buffer so you're not trading during that major news event. All right, guys, and don't forget, if you're sick and tired of missing the best trades every day, taking too many losses, or maybe you see the value in having a roadmap to follow every day, come out and join us. Come trade this stuff with us in our trade room. How many good trades have you missed this week? I'm going to make sure you're on the best setups every day in our trade room. I'll put all the membership links, all the free course links. I'll drop all that stuff in the description of this video tonight. Don't be afraid to call the office. Don't be afraid to call the office if you guys have any questions about anything we've talked about here tonight, and you can always drop me comments in the comment section below. I hope by now you subscribe to our YouTube channel. I hope I haven't scared you away with this horrible voice of mine. It sounds a lot worse than what it really is. Had a big storm come through last night here in Los Angeles, and my sinuses are all jacked up. So I'm gonna close it up for now. I'll rest my voice for tomorrow. Get myself some lemon and honey tea, right? And I'll be ready for tomorrow's trading session. Hopefully I'll see you there tomorrow, 8 o'clock Eastern time in our trade room. If not, you better come back and see us tomorrow night. We're going to keep this fire coming all week here this week to make sure you guys know where the best trades are the following day. Guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.